Hello traders, the title of the video is difference between Elliott wave expectation and the realities of the financial market. This is an essential topic for all traders that are involved in the financial market using the Elliott wave principle to forecast the next price action. All right, so I have a very interesting scenario here, and we want to go through it together so we can talk about the realities of the market and the Elliott wave expectation or the Elliott wave forecast. Okay, as I told traders before, the Elliott wave forecast is an expectation. It's a projection. All right. It's a guide that can help an Elliott wave trader to make excellent decisions and, most importantly, to time the market. For a fundamental trader who is combining the Elliott wave forecast and the fundamental analysis, that fundamental trader will make a better decision in comparison to somebody else that is using the fundamental analysis alone to time the financial market. What usually takes place? The fundamentals in plural, are solid in a bullish trend at the end of the fifth wave. So you look at the fundamentals at the end of the fifth wave, it looks rosy. All the data, it passed the Google Assist test, strong, a balance sheet, blah, 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 generating cash, and so on, at the end of the fifth wave. Fundamentally speaking, one should buy, yes or no. That's it. So they want to buy, but they don't know about the market cycle or market trend. They don't know about Elliott wave. They don't know about Elliott wave forecast. In fact, they are calling the Elliott wave forecast a mumbo jumbo. And I say to people, when somebody is talking about something, like I was talking about predictive fractal patterns, some trader mark it down, blah, 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 that's okay. If somebody is talking about something that you do not understand, you can just smile and watch them as like you go to the mall and see somebody doing something and you just watch, okay? And then you go away. That's a food for thought. So you go home, you think of it. Maybe days later, you may investigate, Google about it, read about it, check more about it. But what people are doing, they say that Elliott wave forecast is a mumbo jumbo, it's not useful. Or maybe they try it once. The person that was helping them with the Elliott wave forecast did not tell them that it's a guide, it's an expectation, the price can do something. Maybe they told them that this is what's going to happen. And they believe that nonsense, that it's guaranteed. And behold, the price doing something else. So they are disappointed about the Elliott wave. But you will see all the time, price goes out, you see this is my first wave, second wave right there on the monthly chart. For ExxonMobil. ExxonMobil is a market leader for the Dow Jones. So if you are trading Dow Jones, you can watch this market leader. You can even use the market leader price structure to forecast what is likely to happen to the Dow Jones index itself. Or you can use the Dow Jones index itself to forecast what is likely to happen to the market leaders or any component of the Dow Jones index. Second wave, third wave, fourth wave, and the fifth wave being extended. There was no Elliott wave violation. I was happy with my wave count. When we were here, I was telling traders that we're going to have what? A flat correction. Did you see that? I still got all my drawing on the chart. You still don't believe that? Can you see all my drawing? I don't remove them. That's why I say to traders, why do I recommend to traders? I recommend to all Elliott wave traders to leave their drawing on the chart. So if there is a new information, you can take it from where you left it. So you may adjust to the current reality without wasting too much time. Haven't I said that before? So you say, Joe, you are speaking to me like my mother. Oh, I do apologize. Okay. So now we have, see, so the reason why I say here, 1, 2, 3, 4, 5. We were expecting flat correction, the C wave of the flat correction. Didn't I say that? I did. All right. So, talking about the difference between Elliott wave expectation and the reality of the financial market is that we are expecting something. We are using the Elliott wave structure, the Elliott wave pattern, Elliott wave theory, or whatever you call it, to help us predict or forecast the next price action. But all those forecasts, though we follow specific rules when we are doing it, we are not gambling, is still an expectation. The reality of the market, what is the reality of the market? The reality of the market is what the price is doing. That is the reality of the market. So very often, especially those who are purchasing Elliott Wave services, all right, Elliott Wave forecast services, they don't understand it, or they take it like a, all right, guarantee. So they give them a forecast. They say, yeah, that's the forecast. It's going to be sunny tomorrow, bright weather. And during the nighttime, something has changed. Next day, it was raining. Always keep your umbrella in your pocket when you are in London, because it rains a lot in London, by the way. Same thing in New York, isn't it? So the forecast and the reality of the day or the reality of the market are two different things. Once we forecast it, we just sit and say, okay, we know our forecast. We know what is likely to take place. So we smile. But we make decision taking in consideration the reality of the market. So how do we do that? As I told you before, use your pitchfork tool, use market geometry, blah, 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 blah. Yes or no, the price action. Okay? So now that I'm looking at this chart, I see my wave count. Looks good. The reality of the market, is it confirming my forecast? Yes. So far, it looks like it's confirming it. Look carefully. So we were saying, it will go down, it will go out, it will continue to go down a little bit more, and then something like this. This is just an expectation. It may do something completely different. And then you say, George, your wave count, your wave forecast. No. The expectation and the reality of the market. So at this stage, taking into consideration our expectation or our Elliott wave forecast, what is the reality of the market that we should take into consideration? So the first thing that you need to remember when we are talking about the reality of the market, the first thing that you should think of, talking about the reality of the market, is the current market pattern that the market is playing. I hope you never forget what I just said. So allow me to say it one more time. When we are saying the reality of the market, the first thing that you should take into consideration is the market pattern. There are three market patterns, as I say 100 times: the rising channel, the declining channel, and the horizontal channel. The horizontal channel, we are referring to consolidation. But when we are talking about consolidation, we are also talking about triangles, or even those tiny rising channel when the price is still oscillating. So looking at this chart and taking into consideration for the ExxonMobil, there is a triangle. Did I hear yes? Somebody say yes in the background? Because I can read your mind, traders. Somebody say yes. Did you say yes? All right. Why did you say yes? Because you spot a triangle here. Did you see that triangle? The price. This is now. So what I'm trying to communicate to you is that when we are taking into consideration, all right, the reality of the market, the most important thing. Suppose you miss some information, maybe the price is showing a head and shoulder chart pattern, or inverted head and shoulder chart pattern, or something else, or there's another structure in place, maybe it's a Fibonacci pattern. You miss everything else. But what you do not want to miss, talking about the realities of the market, is what you promised me today, and you will never forget that, is the market pattern. So when you are reviewing your Elliott wave forecast, or if somebody give you an Elliott wave forecast, because I know some traders are purchasing Elliott wave forecast, all right, and they gave it to you, all right, it's an expectation. The price may confirm it or may not confirm it. Now, in order to use more efficiently that Elliott wave forecast, you must adjust it to the current realities of the market. And what is that? The first thing that you should take into account, the market pattern. So now that I'm talking about suppose I gave you, okay, suppose I gave you this as a Elliott wave forecast. At this junction, you are looking at this chart. What is the most important thing that you should take into consideration is the orange triangle that you are looking at on this chart. All right, it's the orange. I have too many pink lines, so I'm trying to change the color of those. So turquoise is not very clear. All right, are you getting it now? Or am I talking too much? All right. Okay. So now what are they doing? Okay, they are selling on the top of that orange channel. That's what's happening now. So they're selling here, push it down. See, came near again here. They try to sell it, and they are buying where? At the lower part of it. Okay, this is it. So with that information alone, we will also talking about the current market pattern. After we have identified the current market pattern, that current market pattern will determine the appropriate strategy that we will deploy. All right. So it's a consolidation play they are doing here. Doesn't mean that definitely will find support all the time here. It did find support, so there's a high chance it may find support. That's the first thing. But then again, you measure the height of that triangle, of that channel, whether in an uptrend or downtrend. If there is a breakout here, you project it here. If there is a breakout here, you project it here. If there is a breakout here, so we can just put it here for now. Okay, that triangle can bring us all the way here. That's the ultimate target. Does it mean that the price will definitely reach that target? No. Can turn around before that. And as always, there is a midpoint target somewhere in the middle here, around 54.62, roughly. Call it this support here. So you may, if I move this line a little bit down here, that will be a kind of a midpoint target. As it's going down, it may find a support near that zone. All right, you see now? So it's the triangle that you must watch. So you'll be putting the pitchfork tool to determine the possible path. Even here, this section here, you see this section here, it went down. 1, 2, 3. You have 3 points, yes or no? You do. You place pitchfork tool like this, because it's rolling it down. That can also help you. It's not good. You see, it's going completely pressed out of it. You see, it breaks a ball that declining pitchfork tool, retest it on the edge. And also, you see the intersection between the moving average 200 and that declining pitchfork tool. Right. I think I've said enough now. The difference between the Elliott wave forecast, the Elliott wave expectation, and the reality of the financial market. What is the price doing now? Or you take into consideration when you are making your decision. The forecast is an expectation. It's not an exact science. Take into consideration the reality of the market and adjust accordingly and trade according to the current reality of the market. So like I'm telling you now about this triangle here, and I was telling you that I can read the mind of some traders saying yes. The reason why I'm stressing on this triangle, why? It's a triangle here, yes or no? What's the meaning of the triangle? The triangle is telling us that anything is possible. The price can break above that triangle and find a support and continue to go up. Then we come back again and we review this wave count. So 1, 2, 3, 4, 5. We see so far. We may say, all right, that becomes 1. Yes or no? So the reality of the market can also help us to be prepared, because now we see a triangle. We say, oh, be careful. Anything is possible. Okay, break above it and find a support instead of going out of it and going down like we are expecting it. You see now? So if it goes above it, 1, 2, 3, 4, 5 becomes 1. And we say, okay, this is a corrective first in a triangle, and then the projection will be on the other side of the breakout. All right? Are you getting it now? All right. Okay? The projection will be on the other side. So anything is possible. If it breaks above the triangle, I find a support, and it comes on certain as kaput. Don't fight it. Don't fight it. All right? Just flow with it. If you break below it and find a resistance, don't fight it. But right now, the reality of the market is a consolidation. People are selling along the top here, and they are buying along the lower part of the triangle. This is the current market pattern, depicting, so to speak, the current reality of the market. As I was talking about this triangle, the reason why I was dwelling on it, let's show you now. So, ExxonMobil is a market leader for what? The Dow Jones. Let's see the Dow Jones chart. Okay, Dow Jones DJI, Dow Jones Industrial. Now, it's not depicting yet a triangle. All right, we can say there is a kind of, like I do it before for some of the other thing. We can connect. Okay, you can see this top and this top, and draw that line there. Okay. I did it. Is it with Nasdaq 100? All right. Some trader, when I draw a triangle, they say, Joe, what are you doing? This is not a triangle. It is a triangle. Why is it triangle? It is a triangle. Why is it triangle? It is a triangle. Now see, you have 1, 2, 3 points. All right, 1, 2, 3 points. Connect the first 2 points. That will just it. Okay, so that's what we are talking about. And then we can draw also the media line of that triangle. All right, that's what I did for. Is it for the Nasdaq 100? Okay, something like that. And extend it. Now, if I bring back now, because most of the this is Nasdaq 100, I'm bringing now. Well, you see, I was doing similar to 1, 2, 3. All right, 3 points. You see that triangle there, and now it pop out. It pop out. You see, pop out nicely. Yeah, that was again a beautiful forecast that we did here. All right, the expectation, and now the market is confirming our forecast for the Nasdaq 100. Okay, and the S&P 500. Okay, where are you? SPS. Again, you see, I did the same thing, a triangle here. A lot of people didn't see that triangle. Pure. All right, it's coming out nicely, beautiful, gorgeous. All right, so this is what we are talking about. So if we go back to ExxonMobil, the same. That's why I'm saying to you, a lot of traders were saying, yes, I remember that triangle. So as an earlier way to that, you need to have a mind that is able to remember things, can spot things quickly. So, like now, you see that triangle straight away. You remember, you connect it quickly. You connect it. There are triangles on major indices. Here again, there's a triangle. But what I want you to understand is that this is a market leader also showing a triangle. All right. How long have I been talking to you now? Only 18 minutes. Yeah, that's too long, George. We want is 7 minutes. Okay, some video cannot be 7 minutes. Some the video like this cannot be 7 minutes. Okay. So this will conclude our discussion today about the difference between Elliott wave expectation and the reality of the financial markets. If you have any question or suggestion, please put in the comment section. And in due course, I will be recording another video to answer your specific question. If this video is truly useful to you, please let us know by giving us the thumbs up. If you dislike it, mark it down. If you think it's an essential tutorial that can help other traders, feel free to share it with your friends on Tumblr, Google+, Twitter, and also on Facebook. If you have not yet subscribed to our channel, please subscribe to our channel and be sure to click on the notification bell. So when we are doing a live streaming, you will be the first person to be notified, so you know exactly when the live streaming will start. Click on the notification bell. Our YouTube channel for Elliott Wave Trading is 24 Elliott Waves, digit 2, digit 4, Elliott Waves in plural. For those of you who want to join us on Facebook, our Facebook page is Stochastic-MACD. So this will conclude our discussion today about difference between Elliott wave expectation and the realities of the financial markets. Before you run away, as you know, at the end of most of the video that I've been posting recently, there will be a free test drive for using the Trade Ideas software. I will leave the link in the description section for you, so you may test drive the Trade Ideas software that allow traders to put a high probability trading setup. All right. Thank you for watching, and I will speak to you soon. We are the TSTW 24 traders. Thank you for watching.